The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with me, your humble host, and of course, our engineers who are musically challenged. I'm almost getting ready to write a letter to the president and asking them if Gitmo is really punishment enough for these musically challenged individuals, and we'll see if we can't get the lead-in music fixed next week, as apparently we have some severely brain damaged. Maybe they've been holding their breath underwater too long, but we call in at 877-927-6648 and tell Disco Steve that there are cures, liniments, and ointments for whatever he has. So let's get to it. Of course, we've got a market that's up about 14 points on the S&P cash, 1636. We went to 1642. The volume is not good so far. 2.15 billion shares on the consolidated New York Stock Exchange tape. We've got pretty much the rest of the market doing, well, let me find what I got here, doing what we thought it would do, and that is finding some movement, a little up on the dollar index today after the what I thought was an exhaustion move on the way down. We're going to talk about that in a little bit also. But gold off $32 today. We had a caller yesterday that asked me what I thought of gold, and I said after a lot of destruction, the end is not easy. And it rarely is, but let's see if we can get anything out of the GLD so far before we get into the snooze and what's actually going on out here. Let me clean that chart up. I still think that we have a good opportunity to go out and test the lows. You had a huge volume move out here, and it has not been tested yet. Almost always, and we were talking about exhaustion moves. When you get these monstrous moves out of nowhere, they're kind of like the bulb that burns twice as bright. It only burns half as long, and that's exactly what you get. When we had such a huge move, a lot of volume yesterday in currency markets, a lot of times that is the exhaustion move for a little bit. Then you will get the retest. And what I suspect in gold and most everything we have is we are in a bounce in the way down. We'll talk about that also in the S&P cash. But it looks to me like we've got a 1550 target out there for an ABC down if today's high was the top. And I think this is kind of the market that we will see this summer, lower prices. And nice, because I like to, now that we know some of the stronger stocks out here, if they continue coming back on light volume, we'll be able to pick them up at the right point and make some decent cash on them. I am not bearish on everything. Actually, I had a new purchase and long, actually, in the Tech Insider today. It is rare that at these levels, I would be wanting to do something, but I think that some bottom fishing out here is in some of these that have pushed back fairly strongly. But gold probably the most interesting one out here, that we couldn't get back in and test that low on gold. When you get that high of and that huge of a move, it never really seems to just get one bounce and that's over, and then it turns right around. Markets do not turn on the flip of a dime. They turn over time. What we had from the 130.51 low of April 15th to the 143.43 April 26 high has been known in annals as the automatic rally, one that comes along without any kind of preparation, so you really don't know what's going to happen. You get the pullback, and we actually did pull back on lighter volume and energy. We did get fairly decently into that high volume low in the GLD, so you bounce. But normally you bounce a couple of times. It's not like you just bounce and it's all over. These have 1, 2, 3, and actually I have a pattern that looks sort of like this that I went long on in the Tech Insider today. So there are some things out there that I think have considerably consolidated and are at the levels where you could take a shot at them, but they are few and far between. I think we've got a summer of consolidation, and not the winter of our discontent, but the summer of our solitude, I think. And I'll have to come up with a saying for the summer. Anyway, we've got that for one. I wanted to go to the S&P cash here real quick and show this, and really need to kind of get zoomed in here fairly quickly. What do I want to show? I want to show expansions, excuse me. And that's going to be my A, that's going to be my B, and since this one's so short, it's going to be my C. That's supposed to be my B, and that one is supposed to be my C. There we go. This sets it up. We've got just a 1-to-1 that would take us to 1553.68 on an ABC, and I think very much with the volume and the pullback that we've had off of 1642, that we could start seeing a longer pullback, especially for those traders that have not been along, had not seen the bubble burst in 2000 to see how wicked these markets are. This is exactly what it was like every day for about a year. That is, 2-3% moves down, 1.5% moves up. Everybody said it was over. You had a 3% move down, 2% move up. People were 50 and 70% short equities. The things would race out of the barn. You'd see things, go from 50 to 150 bucks that had not made a dime, were never going to make a dime, would be out of business in 6 months from now. It became a gambling casino instead of any kind of legitimate thought or belief that at least somehow these things were tied to fundamental values. I think that we've seen several stocks like that over the last few months, that there's absolutely no way that they could ever be worth what they were if they grew at their rates that they had today for 10 years. So, and especially, we see stocks like Amazon's up $7 today, a company that hasn't made money in 10 years, poured it all right back into the business, which is great. But the belief that one day they can just flip the switch and the money will come, as soon as they do that, the stock will actually probably crumble as the PE comes into something less than 600. It's rare to believe that we could have a company this large, never make money, and still properly evaluate what its value was. I will guarantee you it is much, much lower. And as long as you can say, well, we're just pouring it all back into the business, there's no easy way to tell how much that business is. Of course, their major business was sending products to people's homes when there was no sales tax. A decidedly market advantage over local companies. Now that that advantage is going away, they're going after other things like trying to get people to order things because they give away tablets that they basically lose a lot of money on. I would love this company. They do a lot of things extremely great. The question is just what is it worth? And right now there's not an easy way to go back and value it. We see other companies like IBM missing their numbers, blowing away things. People can't wait to buy them. Always a good sign that you're in a bubble. When we look at IBM today, this thing, of course, came off, tried to go back up. To me, it looks like IBM is in a big path of distribution, and probably, it's one of these companies that's highly held and in everybody's, you're not going to get fired holding IBM in your portfolio. That's kind of the reason a lot of people have it out there. But they did miss their numbers last time. I suspect that they will miss the numbers next time too. And now we're just 2 months away from those next numbers. So I have a feeling we're going to see a lot of these stocks continue to move and move lower. A lot of traders are talking about Apple today, that it couldn't get out of its way on a day when everybody is really pushing, and especially the NASDAQ earlier in the day was on a tear. We talked a little bit about this yesterday. Of course, their World Developer Conference starts on Monday. It's one of two big conferences starting next week. We'll talk about the other one in the Tom O'Brien Tech Insider hour today. I think that's going to be in the 4 o'clock hour today, but maybe we'll find out before the show ends here today what the plans are. But not a lot of volume, not a lot of stuff pulling out here. 95% of this of the time, Apple has always run up into the developers conference, assuming a new product. And the reason I suspect that it has not is that they did not get the kind of grand bargain that they expected to get from any of the three major recording labels for their iRadio. And my guess is that now that we know that they're paying vastly higher than the original 6 cent per 100 songs streamed insult that they gave to the record producers to begin with, that they're probably paying, and no one has said yet, maybe we'll find out next week, but my understanding is it's not going to be at any kind of level that'll make it a major profit center for Apple, and why I think over the last 4 or 5 days this thing has retraced somewhat. Of course, it is up, and I'm not suspecting that we have any kind of information that's going to blow this thing out, but there just isn't a lot of volume. I suspect it is going to come back in and be a low volatility stock for a while, but needs to come back in probably one more time, get into that 395, 385 area. Trying to see what else is going on. Let me... see if anything else. Gold fell $32. Yeah, we already know that. July silver fell 99 cents to $21.71. Let's see if there's anything else I wanted to hit. Large cap gainers, UAL is up strongly. I hadn't looked at that yet today. Just get that before the break. Could be an ABC up. Not a lot of volume today. That's the problem with every one of these stocks that I have seen rallying fairly extensively. This thing did actually give a very good signal in that it broke the previous high of March 20th, 32.95, that had 6.5 million shares and really had a very light volume of 2.7 million shares at the last high. Even if you took the most aggressive volume within 0.5% of the high there, it'd still be at 4.8 million shares, or 1.7 million shares light. This thing pulled back into that. We're just up to that level right now and on very light volume. We'll be back in a minute. Give us a call at 877-927, 927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other summary prospectus. Please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we continue the day out, pretty much what I expected, which is the market would fade. I thought maybe we'd be able to keep 10 points of this bounce earlier this morning. In fact, I was kind of surprised that we got a little bit more bounce out of this than 10 points. But I think we're probably going to be pulling back in fairly quickly to go back down to that 1550 area, at least on a one-to-one ABC. I was preliminarily thinking if this move did not break, we'd hit 1575, but probably a fairly decent indication that we've got a small ABC down to 1550. So, not a bad deal. What I did want to talk about is the art of timing the trade charts. And if you are getting started and or you've read Tom's book and want to learn more about Gartley patterns, we have a couple of good examples. We've been bringing up Oracle as one of the better ones. This one's going to probably slowly move down to $31.16. A lot of times when you see these, there'll be actually a pattern within a pattern. And we've got kind of that right now, but my guess is this will probably start heading lower again on Monday. But you'll get these, and the patterns may not be as symmetrical. And normally, if they are not fairly symmetrical, in this case we've got an X to A that is very long and a very short CD to a D point that didn't actually even come in and get to probably, a good 78% retracement, something like that. Probably not as indicative of the one. But if you're looking for very good ones to start writing down and watch how these things play out, I would look at Oracle with the X point on March 15th, the A point on March 25th, the B point on April 10th, the C point on April 19th, and the D point on April 21st. If you want, you can always email me at path@tfnn.com, and I'll be glad to send you at least this chart if you're just listening on radio or driving around in the car and can't see it. Give me send it to me at path@tfnn.com. Of course, we're nice enough to send out these charts every morning, and to the subscribers to Art of the Charts. But in case you're not around your computer, you can around where you can look at the charts. We do put them out. I actually ask this one as the second good one be mentioned. I didn't check it. Maybe it was, maybe it wasn't. But I'm hoping everybody looked at it because it was another one of these beautiful Gartley patterns, and it's exactly what you're looking for out here. We'll probably talk about it tonight. And again, I'm not saying that I probably would have taken this trade, as I am on the short side of the majority of the market. But if you want to find ones that are looking good out here and trying to get a little experience and stick time on trading these, this is exactly what you're looking for. And the ones where the numbers do line up have a high tendency, even in markets that are trending against them, to do well. I did ask Mike in my office, who does send out those things, to actually talk about CLMT. That's Calumet Specialty Products. It is a oil company in oil services, I guess. I don't know a lot about the company. I just saw this pattern. I said, this is everything that you're looking for out here. If you're playing at home and want to look at your charts, the X point is on, what is that, December 28th at $29.25. The A point comes in on March 4th, $40.25. The B point is April 3rd at $33.75. The C point comes in at $38.10 on April 29th, and your D point came in right at the 7.9 retracement on June 5th at $31.60. So the numbers work out. I really like the A to C retracement. It came back 67%. This is really, when you look at ones like Oracle, you look at ones like Calumet, these are the patterns that you really want to be watching from in the nightly scans. I try to get rid of the worst offending and nasty looking ones, but I leave most of the standard Gartleys, and I try to go out there and push these Gartley Tiger patterns. Now when you or Tiger Gartleys. Now, when you look at this one, it's exactly what I want to look for. If you're watching on Tiger TV or you want me to send you this chart, there was on my power law vector indicator, you can see how the volume and energy up on this thing from the X to A point was 2.1. And the ratio back was about 1.4 from the C to D leg. So it's everything you want. You saw about 25% lighter energy coming from the C to D point as it got right to the 7.9. And this thing's had two nice bounces and a nice little move off here. Again, it would be trending against the market, but we'll talk about that in a minute. Be back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we're looking at the market continuing to fade a bit. Let me update this stuff. Well, it's updating itself now. Okay, so we're just up 12 points on the S&P cash now, 2.3 billion shares. So the last 4 points down on the S&P cash, pretty light volume. It'd be very interesting to see what kind of close we get out here. But looks like more than willing, people are starting to take a little money off the table. And see how the VIX is doing out here today. Boy, they couldn't sell the VIX fast enough earlier today. So down $1.17. I suspect this is just gaining steam to go blow up to about 23 and then probably 30, 32 over time as we pull back and kind of keep an eye on this marketplace. But anyway, some decent stuff going. I can already now start seeing some places that I'll want to be buying some of the tech stocks this summer. And I put it in the Tech Insider today. It came out probably a little early today. But we are going to be talking about a lot of things tonight in technology in the 4 o'clock hour with the Tom O'Brien show and with Tom O'Brien. So we'll have that. I had a really good show last week. We're going to have to see if we can do as well this week. Anyway, we're talking about Calumet Specialty Products. If you really want to see one, of course, today the very light volume and the pop on this, you know, I would just think that I was trading against the broader direction of the marketplace. But you know, most of the Gartley patterns that have been coming in have been bullish Gartleys of one side or the other. But if you know what you're looking for in a pattern, These is, this one I suspect is probably going to fail because of the general market. But this is exactly what you're looking for. You're looking for that nice butterfly looking pattern. You're looking for the nice pullback with light volume. You're also looking as it comes through the B point, does it come through with lighter volume? And when it breaks back above it, does it come with higher volume? And as we got through here today, the answer is no. So you'd know that it was probably a good time to go ahead and take the money and run. Anyway, we're going to look at some other stocks real quick. So let me get set on that. I wanted to look at some others that were moving in this marketplace. So let's go look at it. Of course, a lot of the ones out here that people are really, come on. There we go. Is it? There we go. I don't know why this thing is, the computer's locking up on me. Hang on a second here. Baidu. BIDU. This thing's finally trying to make a move back higher. And this thing, it's getting right in to where I suspect this thing is about ready to turn back to the other side. One of the things that was not in the news today, or at least very few people I've seen talking about it, are the interest rates going up and significantly higher in just the last 3 days in China. I'm going to be very interested to see how we see the open on Sunday night in the Asian marketplaces. But you've had 3 days of very extended and very fast upticks in the interest rate in China. And I thought that some of these would be back trying to fill these heavy gaps down. But if you are long, probably Baidu, looks to me like you're probably going to get just about, you've probably gotten just about everything that there is. Came down on monstrous volume, still needs to come down and retest the $82.96 level from April 5th out here, which it has not done. So still sitting out here with a decent volume in the low. Of course, it came down with a huge volume on the 5th of February with 17.5 million shares. And, of course, we haven't had anything like that coming back in here and trying to bust forward, which is always kind of a thing where you've got to worry about just what is going to happen. My machine is possessed here. I don't know what's going on. But anyway, the coming back into this heavy gap down should be a very interesting issue. Let's see, what else do we have moving up here? I'm going to have to close this window here if I can there and reopen it because there's something really bizarrely wrong going on with my browser. Okay, NASDAQ. What do we have here? Price change. Okay. Other stocks that are moving fairly well. FFIV, this thing, of course, got hit. Interesting that on a day like this, it tried to get up and go positive today, but still didn't have it. This thing, another one of these came down on monstrous volume, kind of playing around. Got its bounce and had a double top, so it's kind of looking like Baidu out here if you're looking for similar patterns. This thing came off. But looking at Apple, looking at F5, some of these tech stocks that have gotten blown away don't look like they're ready to keep on changing so quickly. We've been talking about the Tech Insider about some problems that both Qualcomm and ARM's holdings would have. And it looks to me like since we talked about that, we have seen these start to roll over. They're going to start getting some heavier competition. What we do have, though, is Qualcomm finally getting back down to its previous low, where it should start finding support. You'd still like it to go another 20 cents lower, and I suspect we're going to see that on Monday and get into this last $61.25 low from April 30th out here. Of course, we're just a little off that today, lighter volume. If we are thinking that we're going to have yet another shot at a Qualcomm trade, that's going to be it. But ARM's Holdings was another one that I'd been talking about being potentially weak. ARMH Holdings. If I can actually type correctly. This is another one we've been warning about mostly because competition, especially in their part and their field, actually I've been talking about it in the Tech Insider since September 28th of last year, about the time that this new company was going to, actually an old company, was going to be a new competitor to ARMS Holdings. So we're actually seeing this out here. Now, if we notice on this one, it is getting back into its previous low with higher volume. So we're going to be trying to keep an eye on this. I expect that everybody's going to want to go back to the well one more time on these, so don't be too surprised if they get rather volatile. Wanted to, let's go back here and look. Everything's moving pretty quickly. What do we got here? 12 points. So I wanted to look at the home builders real quick. We talked about them moving down. And what do we got here? Got a little bit of everything moving around. See if we have anything significant. Lumber liquidators look like it had been doing away. HOV. We'd been talking to, I forget who called in about HOV a few days ago. Of course, you can call in at 877-927-6648 and talk about any stock you want. And at the same time, remind Disco Steve that a mind is a terrible thing to waste, especially on bad music. So anyway, what else do we have? We've got HOV. The whole thing was coming into earnings, if I remember right. This thing just went sideways. I think he was in at about 550. I just didn't see a whole lot in this thing. Looked like about, when you looked at the options, it looked like that they were not betting on any more than 50 cents up or 50 cents down, and I didn't think that risk reward was in it for that. I guess it, let me check the headlines about that. Did they have it come in at Bratsoft? Yeah, that was on Wednesday. There just wasn't a whole lot in HOV to go after. That looks like that was a pretty good call. Let's see what else we have in here. Pulte Homes, PHM. Okay, we're back to the support level on this thing, and of course it did go below the two previous highs out here at 2160 for March 20th, and also the January 28th high of 2197. And it looks like we're probably going to close back below it one more time. We've got Tim from Boston. How you doing today, Tim?
Pretty good, David. How are you?
Another day in paradise now that we've sent our crappy weather up to you.
Yeah, well, we have it. I would like you to look at Salesforce CRM and see what you think of that.
I see exactly, and was looking at it the last couple of days as it came back into these lows. I see exactly what you're looking at. Here would be the problem that I have, and there's the fundamental reason and a technical reason. One, again, I'm thinking that the market is going to pull back a little. I don't think you'd lose a lot of money on this. I just think that there's going to be probably a small bounce and then a pullback, and you're going to get one more shot of it maybe in the next few weeks in CRM. That is the technical view of it. The fundamental view is that you had a very significant, well, let's continue on the technical view. You had a very significant example of this thing double topping on far less volume up here from the March 11th high to the May 20th. So you've got your high put in. It doesn't have to go back up and test it. So it's come back down here to where this thing really took off last time, which is on the 21st of November with 27 million shares. It's come back in there and found support. Doesn't mean it's going back up. My guess is this thing's probably going to go sideways for a while. And the problem is, how much money are they going to make when Amazon is basically destroying the server and the virtual server market right now by really just clubbing them with very low prices. I don't know if you've been paying attention to that at all, but I was working with TFNN here to look at maybe trying to make or get additional streaming on a cloud service. and just talking with some of the people in the office here. And, for what it is, Amazon is incredibly cheap, especially compared to companies that offer a lot of what they do, like Salesforce, but even just regular kind of second-tier ISP service providers for a company like the size of TFNN. And it's just not that much more expensive. So I would be kind of wary that their margins are slipping. Do you know when their next earnings date is?
No, I don't. No.
Well, let's get it real quick here. Earnings date. Okay, August 19th. So you've got, I think, enough time to get back in this. This thing kind of came off, but if I remember the earnings call correctly and the notes on it, because I didn't listen to it, the whole issue was about margins and how Amazon is basically tamping this entire market down. I don't think they're going to do it forever because they can't make that they can't make the kind of money that they need to. But again, that's why Amazon's up. If you had to actually ever price it against something with a PE like Salesforce, the exact same thing would happen to Amazon. Everybody just kind of pretends like Amazon doesn't need to make any money, and they can get by with it. But where it seems like the market's not willing to bypass this same thing in CRM. But that's why I'm thinking that there may be a couple more months with this hyper-aggressive pricing for virtual servers and cloud services in Amazon, and that's probably going to keep CRM down until everybody decides that they want to start making money again. But Amazon kind of wanted to put everybody down and kind of crush its competitors, and I think it's effectively kind of done that. You are down here at support range, but we could have 2, 4, 6, 8 weeks down here as the market pulls back, and I think we've got a pretty significant event that shows that 1550 certainly could be in the cards on the S&P cash, and that would be what worries me on this thing. Look for a small bounce, then a pullback, and you want one more time back into this $37 range on lighter volume. I don't think I'd be betting on the automatic rally here.
Okay.
Is that what you were thinking about going long, right?
Well, no, I was thinking about selling some puts on it, but I don't.
That's, if you think this, I would say of stocks out here that have a good chance of going nowhere fast, not a bad idea.
Yeah.
So, if you thought that that was one way, you're going to have very decent support, this $37 level. I didn't look at the puts at it. What were you thinking about doing?
Well, I was thinking of going down to probably around $27 or $30.
Not bad. I mean, June, July, August.
Yeah, I'd go out probably 3 or 4 months.
I think that this thing is it's got very decent support. What you really have against it is that huge volume day down. Nope, we're done here. I'll finish talking about it unless you want to hang through the break.
Okay, Dave, thanks very much.
You bet, Tim.
Bye-bye.
Bye.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Just wanted to finish up with Salesforce. What we saw yesterday in the broad markets, what we saw in CRM on the 4th of June here is exactly what I want to be talking about. And these super high volume days out here generally don't mean the end of a trend, but they do mean that that trend is probably exhausted for a little while. And so you get a little bounce out of some of these, like in CRM. But that generally does not mean that the end is over. This, in fact, day came in with 29 million shares, where that originally, that gap came back up at 27. So my guess is that we did have a day where the volume did increase more than that gap. But a lot of times what it's going to do is send that stock sideways for a considerable amount of time until it consolidates out, and then you're going to get a better direction. So a lot of times, like we get yesterday, a sharp change in the markets, or a fairly sharp move in the markets, is because of exactly that. You get just a huge move. Everybody's washed out for a while. They try to push it up. They try to push it down. There's just not enough people on one side or the other to really get it moving up or down for that time. We're up 15 points on the S&P cash. Very light volume for the 3 points up and the 4 points down during the show. So kind of listless trading, I would say. Still just under 2.5 billion shares on the day. So not a rousing endorsement of this move. But looks to me like maybe a short squeeze into a weekend. and probably still not enough bears out here to actually drive this market. Anyway, wanted to look at some other stocks of interest. And let me see. We were talking about Amazon, AMZN. And of course, this stock defies pretty much all gravity. But what it does not do here is have any kind of significant volume. So we are seeing a lot of these stocks, IBM, Amazon, a lot of these traditional stocks out here really not get a lot. In fact, you could call this one almost a little flyaway as it got into the 275 range. It hit its 280, which is kind of where it finds a huge selling pressure. And we saw this thing pretty much pull back all the way from that today. So still not a lot of juice in many of these stocks. What did I want to look at? I want to look at Ryland before the end of the day, see how some of these housing stocks are looking. You know, to me, they just still look like they're expecting higher interest rates. If you couldn't get this thing to move off and really get going here today, it just makes me think that there is a kind of a lot of overhang still in these stocks, and people wanting to get out. Take a quick look here. Wanted to look at this one. You know, 3D printers still look like they're going to need some consolidation range out here. Let's see. There's something going on with this computer today. Make sure and reset it as soon as we get done with the show. But you know, just not a lot. I'm looking at SSYS, X1, which I'm expecting to pull back as soon as this thing gets a hint of the lockup period in this IPO. It's got a lot more yesterday than it got today. And DDD. Remember to catch me in the first hour of the Tom O'Brien Show. We'll be talking about a lot of technology and not much in this either. Looks like it's pulling back. So looks like a good time to put our head down. We've got a little time before we start buying, whether it's gold, silver, or equities and technology. We're going to have a nice summer to enjoy ourselves and get ready to buy at the bottom and sell higher. We'll be back on Monday. See you then.